Hello everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 3rd of December. Now it is non-farm payrolls Friday today, so markets will certainly be focusing on the important US labour market data later in the session. There are two key factors that are driving markets at the moment. First of all, Federal Reserve monetary policy after the Fed Chair Powell's testimony earlier in the week that suggested that tapering of asset purchases could well be accelerated. So the payrolls report will have an impact certainly on how the market views that, but also on Omicron, the new variant of COVID that has been causing waves of fear through markets in recent sessions. Now, the latest news on Omicron is there are more cases in the United States, and the markets, certainly Wall Street, haven't yet necessarily reacted negatively to that, and that is an improvement. That's encouraging, and Wall Street actually closed higher yesterday, and futures are higher today. So we're also seeing focus on the oil price after such sharp moves to the downside, Omicron being one of the key factors there. But an OPEC Plus meeting yesterday suggested that the 400,000 barrels per day of production curb increase that we're seeing through on a monthly basis is going to continue, but the meeting is left open. Now that open meeting suggests potential for that 400,000 to be shifted slightly. So oil price is moving on the back of that. Now, so in terms of Forex majors, the dollar is actually now once more seemingly strengthening again. So we'll be looking out for how that comes out of the payrolls report later. Now the charts we're looking out for today, we're looking at cable, where cable has been just edging lower. The downtrend that's been intact on cable is continuing, but will it continue to fall away is the question. We're also looking at the oil price. As I said, that oil price is starting to show signs of improvement. And finally, we're looking at the DAX. Equity markets look to be finally moving a little bit more positively on the Omicron news. So let's have a look at whether the DAX can break higher. Okay, onto the charts. And onto the Infinox MT5 platform, starting off with sterling dollar. Cable has been in this sharp move to the downside, this downtrend for the past month, 4 or 5 weeks, continued to fall. Seemingly, it was testing the resistance around 133.60 area, but that resistance remained intact, 33.60, 33.70. And it's continued on this trend lower, and it seems as though it's now starting to drift lower. In the last couple of hours or so, it started to move lower again, testing that support at 32.60. If it breaks that support, you're looking back at the spike low again. But it certainly looks as though that the configuration is through this consolidation. It seems as though that the market has used that as a chance to sort of renew some sort of downside potential on cable, with the dollar strengthening once more pretty much across the Forex majors today. So 32.60 is the level of support on cable. If that breaks to the downside, then I think you are starting to look at the key spike low once more, and ultimately that probably doesn't help to stop cable too much, because there isn't any real support you've got until probably the 131. So yeah, this is really still moving to the downside on cable. The oil price has been in this really sharp move low, massive volatility through oil in recent sessions, huge moves higher and lower, seemingly unable to find any real appetite for buying. Any intraday rallies are being sold into. However, signs of a potential turnaround. We had that news from OPEC yesterday. Oil price initially surged to the downside on that, but then recovered quite decisively and solidly, now starting to form higher lows on that hourly chart, but also breaking out above the 71.30 level of resistance in the last few hours. That is important, because that was the first sign of a lower high being broken, but the key lower high comes in at this reaction high at around 73.50 area. You can see on the 4-hour chart that is a much more considerable level of resistance, and even on the daily chart that is actually Wednesday's spike high before selling off. So that is the key level of resistance to breach. If that can make a move above that, then that does become a recovery scenario, certainly for oil, and you can then start to think about recovery potentially into the high 70s again. But that 73.50 level of resistance is crucial. And German DAX, again, sharp selling pressure, big volatility, unable to hold on to intraday rallies until yesterday. We started to see a positive close, and it seems as though that the early downside move today has been bought into. So again, if that continues into the close today, we could start to see a real turnaround. Now, you can see on the 4-hour chart, there is this potential for this to become a base pattern. 15,510 is the resistance. If it breaks above that, certainly on a decisive basis. But look at this 4-hour RSI starting to move above 50. That is the highest it's been for a good 2 or 3 weeks now. So this is a turnaround play. This is a move that I'm really starting to think about and starting to look more encouraging. The higher reaction low at 15,120 area is key support. Thank you for watching. I hope you found it informative for your trading. Join me again on Monday. We'll be looking at how the markets are set up for a new trading week. So I'll leave you with the Infonox support and resistance table, and I will wish you good luck in your non-farm payrolls trading, and I'll speak to you Monday. Thank you very much.